Welcome to Return My Capital, where we cover companies and investment products focused on returning capital to shareholders. Today we're going to hit 9 companies that just announced increases to their dividend payments in the last week, hot off the press. So right up front, the 9 companies I'm going to provide a quick update on before doing a very brief deep dive on each are American Tower Corporation, Bank of Montreal, Bank of Nova Scotia, Donaldson Company, Lowe's, Medtronic, Royal Bank of Canada, Town Bank, and Universal Corporation. So maybe you're an investor in one of these companies, maybe you're interested or invested into a particular sector of the market that these companies participate in, maybe you're a broad ETF investor, or maybe you just enjoy staying up to date with the latest happenings in dividend growth investing. So whatever it is, stay tuned, enjoy the update. I'm going to kick things off with American Tower Corporation here, ticker AMT. Their ex-dividend date is June 15th, and their payout will be July 10th. They increased it just 1 penny from $1.56 to $1.57, which represented a 0.64% increase. American Tower does now yield almost 3.5%, and they've been growing their dividend for 13 years. Next up, we had Bank of Montreal, ticker BMO. Ex-dividend date will be July 27th with a payout on August 28th. This is a Canadian company. That's why you see this CAD here under the currency. So you will have foreign tax withholding and some currency fluctuations. But they increased it 4 cents from $1.43 to $1.47, almost a 3% increase. Bank of Montreal now yields over 5%, 8 years of dividend growth. Another Canadian financial, we've got Bank of Nova Scotia, ticker BNS, July 3rd, ex-dividend date, and July 27th, payout date. Increase of 3 cents from $1.03 to $1.06. Almost a 3% increase, 6.3% yield, 7 years of growth. So pretty beefy dividend yield there on Bank of Nova Scotia. The third Canadian financial was, let's see here, Royal Bank of Canada, ticker RY, ex-dividend date of July 25th, payout August 24th. They increased it 3 cents as well from $1.32 to $1.35, so just over a 2% increase, but it does yield 4.36%, 8 years of dividend growth. So somewhat similar metrics there on the 3 Canadian financials. 3 of the big banks up there and our neighbors to the north if you're an American citizen. Next company I wanted to hit was Donaldson Company, ticker DCI. June 6th, ex-dividend date, rapidly approaching with the June 23rd payout date. 2 cent increase from 23 cents to 25 cents. Almost a 9% dividend increase, so a nice dividend increase. Yields 1.5%, and they've been growing their dividend for 37 years, making them a dividend aristocrat. We've got Lowe's, ticker LOW, July 25th, ex-dividend date with an August 9th payout, 6 cent increase from $1.05 to $1.10, so almost a 5% increase, not quite as large as some of their previous dividend increases, as you'll see when we jump into a few more of the metrics on Lowe's, but still 5% increase is a 5% increase, so they now yield over 2%. And that is a little bit higher than they had been when their share price was at some pretty significant highs. 61 years of dividend growth for Lowe's, making them a dividend king. We've got Medtronic, ticker MDT, June 22nd ex-dividend date, July 14th payout, 1 cent increase from 68 to 69 cents, only a 1.5% increase, 3.4% yield, 46 years of dividend growth for Medtronic, kind of closing in on that dividend king status as well. We've got Town Bank, a American regional bank here. So June 29th, TOWN is the ticker symbol there for Town Bank. June 29th for ex-dividend date with a payout date of July 14th. A 2 cent increase to their dividend from 23 to 25 cents. Represents an 8.7% increase with a 4.2-ish% yield, 12 years of dividend growth for Town Bank. The 9th company I wanted to cover, Universal Corporation, ticker UVV, July 7th, ex-dividend date, August 7th, payout date, a 1 cent increase for Universal from 79 to 80 cents per share, so just over a 1% increase, does yield 6% though, as you would expect from a company in their industry, which we'll cover here in a moment. 53 years of dividend growth for Universal, so dividend king there. So that's the quick snapshot of the 9 dividend increases that were announced within the past week that I wanted to touch on. So if you just wanted the quick down and dirty, that's it. I'm going to jump in here, do a very quick deep dive of each of the 9, cover some revenue growth, some trading ranges that they've been in over the last 52 weeks, and then talk about the dividend metrics on each very briefly for you. But if you just wanted the list of the 9, there you have it. And let's go ahead and kick over for our brief deep dive. Here we have American Tower, and I'm recording this after the close on Friday, June 2nd. So these will be the final closing prices for this week. We've got just over $191 per share. Had a real nice day today, as did the entire market for that matter. Over the past year, American Tower down 27%. On the 5-year, 36.5% appreciation, and on the 10-year up just about 143%. Still trading almost at the bottom of the 52-week range, and that's from 178 all the way up to 282. We see short interest somewhat negligible, under 1%, 81 billion on the market cap for AMT, and this is a REIT focused on cell towers and more data centers as well through some acquisitions. But it is one of the larger REITs, that is for sure. And again, just wanted to cover some very brief revenue metrics. On an annual basis, back in 2018, AMT was doing $7.5 billion in revenue, and here for 2023, we've got estimates of $11 billion. So some real nice steady growth. Let's take a look at their revenue 3-year CAGR, almost 12%. So that's pretty phenomenal for a REIT. Gross profit margin, almost 70%. Gotta love to see it. In terms of balance sheet, again, we've got an $87 billion market cap with almost $47 billion in debt and almost $2 billion in cash. So not the prettiest balance sheet as you might expect since it is a REIT, but maybe you want to pay attention to that debt load going forward. Dividend yield, 3.4% with an annual payout of $6.28. They've been growing their dividend at a 5-year CAGR, almost 17%, which is pretty spectacular, and that's over the last 10 years they've been growing their dividend. Again, June 15th ex-dividend date, July 10th payout date. If you want to take a look at a pretty dividend growth history chart, it doesn't get much better than this. Back in 2012, they were paying 90 cents per share. 10 years later, they're paying $5.86 per share. So that's pretty spectacular if you're in the into the dividend growth investment game. And a whopping 92% of shares are institutionally owned, which is a very high percentage of shares. Next up, we're going to kick into the Canadian financials real quick. BMO, Bank of Montreal, closed today at almost $87 a share. Towards the bottom of the 52-week range, 81.50 up to 110, down 21% over the past year. This, as you'll see with all 3 of the Canadian financials, as well as the Town Bank, the American Regional. It's been a rough year for financials. If you have been paying attention to things, that's no surprise. 5 years, 11.5% appreciation on the 10-year chart, 47.5% appreciation. Let's go ahead and kick things down here to revenue growth. 2018, we've got almost $17 billion for Bank of Montreal, and 2022, $24.5 billion. But if you take a look at their 2023 estimates, slightly under that. So we might have some stagnating revenues here, given the uncertainty with the wild swings we've seen recently in interest rates and some uncertainty around economic growth in really the entire Western world. So you see this growth over the last 3 years, 10.5% on the 3-year CAGR, but year over year down about 4.5%. If we want to take a look at the dividend coverage here, yielding 5%, $4.23 a year in dividend payments. Payout ratio 45.5%, so not too concerning there. Well covered. They've been growing it on a 5-year CAGR, almost 8%. Not too shabby at all, and they've been growing it for 7 years. July 27th ex-dividend date, August 28th payout date. Dividend growth history, pretty stagnant. You see a little bit of volatility over the years here. So not always super consistent with dividend growth. Back in 2012, they were paying $2.83. 10 years later, paying $4.19. Next Canadian financial, we've got Bank of Nova Scotia, BNS. Finished at almost $50 per share today, down 27% over the past year. On the 5-year, down 16%, and 11% on the 10-year. Again, towards the bottom half of the 52-week range, which is from 45.26 all the way up to 68.47. Revenue growth, It's pretty much a mixed bag, relatively stagnant. In 2018, we had almost 20 billion in revenue. 2022, almost 22 billion in revenue, with moderate growth expected in 23 and 24. You see that 3-year revenue CAGR, again, stagnant, 1.58% increase. Even earnings estimates in 23 here, we're expecting a 15% decline year over year before a nearly 6% increase and 2%, 1.5% really increase in 24 and 25. Dividend coverage yielding 6.3%, which is probably why you would be primarily interested in a bank like this, paying out just over $3 per share per year, 53% payout ratio. So again, not too concerning there. They've been growing it at 4.38% over the past 5 years. And ex-dividend date will be July 3rd. Payout will be July 27th. Dividend growth history, again, a little choppy. Not that consistent growth that you would ideally like to see. Let's go ahead and hit that third Canadian financial, Royal Bank of Canada, RY, closing price of $92.43 today, down 12.5% over the past year, so a little bit less of a decline than the other two Canadian financials. On the 5-year, up nearly 21%, and 57% on the 10-year. So this has performed better in terms of share price than the other two. You see on the 52-week range, about middle of the range, slightly under mid-range, 83.60 on the low end, 106.50 on the high end. So this one is holding up quite a bit better than the other two. Let's take a look if we see that in revenue growth. In 2018, 31.3 billion, 22, 35.6 billion. Had a bit of an outlier here in 2021, almost 41 billion. So a little bit inconsistent, but growth nonetheless. Let's see what that 3-year CAGR looks like for the revenue. See 7% for the past 3 years. And even if we take a look at the earnings estimates, surprising to see compared to the other two financials from Canada, we are not expecting a year-over-year decline in 23, so about a 1% growth, with 7% growth in 24 and a whopping 15.5% in 25. Dividends yielding 4.3%, so still a very healthy dividend, not quite as high as the other two, but performance in the share price has been substantially better, which would explain a lower yield. Paying out almost $4 a year with a 46.7% payout ratio, so it's nice to see it under 50% there. 5-year dividend growth, 6.26%, 7 years of growth. So July 25th is the ex-dividend date for Royal Bank of Canada with an August 24th payout. And that covers the 3 Canadian financials. Let's go ahead and look at Town Bank. Again, this is an American regional bank. Closed 24.76 today, up 5% this Friday, so pretty nice. Still trading in the lower half of the 52-week range, down 17% over the past year. Down 23.34% on the 5-year, and up 63% on the 10-year. So as with most financials, especially a regional bank, been a rough year. In December of 18, we see a revenue of 500 million. In 2022, we saw that climb to 677 million. So not a huge financial, right? We're talking about hundreds of millions, not billions. Market cap on this one is only 1.74 billion. Does have a 1.5% short interest. If we look at earnings estimates, we're expecting a year-over-year decline in 23 of about 13% before a 1% growth in 24. The revenue CAGR, 3 years, just over 7% growth for Town Bank here. Dividend yield is 4.25% here, paying out $1 a year. And the payout ratio, very attractive at 35.25%. Been growing it at about 10.5% on the 5-year CAGR with 11 years of growth. And ex-dividend date will be June 29th with a July 14th payout. I think that covers all the financials for today of these 9. We're going to go ahead and jump into an industrial. Donaldson Company, DCI, maybe not one you've heard of before. Closed at $59.58, up nearly 1% today. Over the past year, up 11%, holding up pretty well. 5 years, 27.5%, and on the 10-year, 60%. So, kind of slow and steady, which is exactly how you would describe this type of company. They've got a 7 billion market cap, so nothing huge. 0.7% short interest. This is very much a slow and steady type of company. Been around 100 years in industrial. I believe they're into filters for components and industrial parts. Revenue, for the most part, we see steady growth. In 18, 2.7 billion. In 2022, 3.3 billion. We're expecting that to jump up to nearly 3.5 in 2023, and a little bit over 3.5 in 2024. So not a super quick gainer, but again, slow and steady. Been around a long time. I believe this one's a dividend aristocrat, not a king, but a slow and steady growth industrial play. Earnings estimates, we're expecting year-over-year growth for 23 of 13.5%. Nothing to scoff at there. Just a 3% growth expected in 24 before returning to 10, nearly 11% in 2025. We see the revenue 3-year CAGR of 8.5%. So again, nothing to scoff at. Balance sheet, market cap 7 bill. They've got 622 million in total debt with nearly 200 million in cash on the balance sheet. So really not unhealthy at all for an industrial company. Dividend yield is 1.7% with an annual payout of $1 a share, 30% payout ratio. Gotta love to see that. With a 5-year CAGR on the dividend of 5%. And they've been growing it for 27 years. Again, June 6th, ex-dividend date, June 23rd, payout date. That covers Donaldson. Let's go ahead and kick into Lowe's, ticker symbol LOW. If you're a dividend investor, dividend growth investor, or really any investor for that matter, you don't need too much of an introduction to Lowe's. Nearly $210 per share. Had a real nice day, up 3%, as I believe the Dow had the best day of the entire year today, maybe since January or something like that. Lowe's up 7% over the past year. On the 5-year, up a whopping 115%, and on the 10-year, up over 404% over the past 10 years for Lowe's. Pretty incredible. Trading towards the upper bound of the range on the 52 weeks, 170 all the way up to 223. You see it at 209, nearly 210 today. 1.65% short interest, and almost 121 billion on the market cap for Lowe's. Revenue, see some pretty good growth over the last 4 years. In 2019, 71 billion. In 2023, 97 billion. Yeah, that's pretty awesome. 26 billion increase over the past 4 years. But we do see some uncertainty going forward, likely a result of kind of a wild real estate market in the United States over the past couple years. So again, in 2023, 97 billion. Estimates for 24, 88. Estimates for 25, 89, almost 90. So maybe a little bit of a deceleration in the near term for revenue. Earnings estimates, we're expecting a year-over-year decline of 2.5% in 2024 before returning to that 10% year-over-year growth in 25 and 26. See the 3-year revenue CAGR of nearly 9%. About 40.5 billion in debt for Lowe's here, with almost 3.5 billion in cash. So not the prettiest balance sheet, but I'm sure management has that under control to the best of their ability. Dividend yield over 2%, with $4.40 coming to shareholders every year per share. 30% payout ratio, and a 5-year dividend growth rate of 20.5%. So yeah, like I said, if you're a dividend growth investor, this name is nothing new to you. I mean, you're looking at nearly a 21% 5-year CAGR on the dividend. Really incredible, and still only a 30% payout ratio. So that's what a quality dividend growth stock can do for you. And July 25th will be the ex-dividend date with an August 9th payout date. Take a look at this dividend growth history chart right here. This is maybe one of the best in the business. It's pretty spectacular. So you see here in 2012, paying 60 cents per share. 10 years later, paying $3.70 per share. That's pretty spectacular. Second to last company is Medtronic, ticker MDT. This is a device company for the healthcare tech business, pharmaceutical business, but really it's a device company. So anyway, $84 nearly per share. Over the last year, down 15%. 5 years down 4.3%. And well, they haven't been around for 10 years, so we see going back, looks like they IPO'd around $75. So quite frankly, pretty flat in terms of share price appreciation since inception. Market cap $110 billion on this one, and a 0.8% short interest. Yeah, devices for medical therapies and whatnot. Revenue in 2019, we see 30.5 billion, and 4 years later in 23, we've got 31 billion. So revenues have been pretty much flat, and expecting the same in 24 and 25, quite frankly. And we'll see that reflected on the 3-year revenue CAGR, just 2.6%. Let's take a look at the dividend real quick. We've got a yield of 3.3%, $2.76 a year. Payout ratio 51.5% with an 8% 5-year dividend CAGR, 9 years of dividend growth. So I don't know, not a ton to really fall in love with this one, and unless you have greater insights into this pharmaceutical devices space, maybe you can make a more intelligent play on this. But June 22nd, ex-dividend date, July 14th, payout date. Let's go ahead and kick into Universal Corporation and wrap this thing up. Ticker symbol UVV, $53 a share, up 2% today. It is down 16.5% over the past year. On the 5-year, we're down 20%, and on the 10-year, we're down 10, almost 11%, trading right in the middle of that 52-week range from 43.60 up to 63.90. Really, you're buying this one for the dividend. Not a huge company, only 1.3 billion market cap with 1.2% short interest. This is a tobacco grower. Pretty straightforward business model. Revenues in 2019, they were doing 2.2 billion. In 2023, 2.5, almost 2.6 billion. So relatively steady revenues. Again, you're not buying this one for growth. Their revenue CAGR on the 3 years a little bit diluted because they went flat here for 2020, 21, and 22 before jumping up pretty well in 2023. But 10.5%. Revenue year-over-year growth, again, it's being skewed by this 22% growth year-over-year. Capital structure, again, market cap 1.3 billion with 850 million in debt, and 65 million in cash. Typically, these companies don't love to carry a very high cash balance due to the litigation risk that is present with these sin stocks. Their dividend yield over 6%, $3.20 per share. They've grown it nearly 8% over the past 5 years, year over year, and they have been growing it for 31 years. They are a dividend aristocrat. So really, you're buying this one for a bit of a diversifier for your portfolio, maybe a type of a steady Eddie company, the type of company that could do well in down markets, up markets, and really just buying it for the dividend. And there's something to be said for that. So July 7th, ex-dividend date, and August 7th, payout date. See the dividend growth chart here. Nothing crazy, but nothing to scoff at either. 2012, they were paying $1.96. 10 years later, they're paying $3.14. 80% share ownership by institutions. So that wraps things up. Those were the 9 companies I wanted to touch on that just recently raised their dividends. Hope you took something from it, maybe enjoyed the update. And then, hey, maybe you own one of these companies and you've been tracking it. So hope you enjoyed the content. Thank you for watching. Do me a favor, like and subscribe, or don't, whatever you feel like. But I do appreciate you watching and hope you got something from it. Take care. Let's make some money. Bye-bye.